We found that the TV is still getting the majority of, well, not the majority, but the biggest part of political ad spending, even though their percentage is down. And the most interesting thing about all this is about half of this advertising spending, a good deal more than half, is locally targeted.
And is it going more to cable, Kip, or to broadcast?
It's still going more to broadcast, but cable's had the greatest increase. And that's because cable, for one thing, is cheaper, and for another thing is more easily targetable. You can get specific audiences, and that's the mantra this year. Target your audience, talk to the people who you know are going to vote for you or who you want to vote for you.
Phil, what's your take in terms of how this is splitting down between traditional broadcast TV advertising versus social media, and which stocks would you suggest are most likely to benefit this midterms?
Yeah, no, as she said, those numbers that she put up earlier, I mean, those numbers for Facebook relative to $2.3, $2.4 billion for local broadcast really is quite small. So the lion's share is still going to TV because it's effective, because candidates need to be there, and they're all there at once. Stock-wise, company-wise, if you look at the top markets where the real spending is happening, you have to look at Phoenix, Las Vegas, Atlanta, the markets in Florida, Orlando and Tampa. Those markets, companies like Tegna, Meredith, Scripps are at the top of the list. And then kind of the interesting pure play, or kind of combined play, is NBC Universal, your parent company, who happens to own cable systems where they sell cable avails, as well as TV stations, New York, LA, Chicago. Now, it's a big company, so it doesn't impact their bottom line the same way it does to a Tegna or a Meredith or a Scripps. But still, it will be material.
Bill, you know what the bull case for these stocks in advance of an election year is? It's an election year, and the ad spending is going to ramp up. Next year, it's going to be, don't worry about the year-over-year comparisons, because last year was an election year. So does the market ever kind of get it right, and is it already fully priced in at this point?
I think this dynamic's been going on for long enough that the market does get it right. They understand the every other year, the even year dynamic. And I think what they're starting to look at right now is really 2020. So you've got a market where, for example, Orlando, predictions was it was going to be $65 million in ad revenue, political ad revenue this year. It's already hit $100 million, so 50% higher. They expect that to be higher in 2020. So I think if you're looking at these companies, you've got to be looking at a couple of years out, and I certainly see some bullish signals out there.